Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we are diving deep into Verizon Communications, that's VZ. We're using data pulled, October 7th, 2025.
Yeah, and it's a really interesting setup.
It is, right?
Yeah.
Because VZ, usually seen as this safe, almost utility-like stock.
Right.
Well, it's taking a sharp hit right now.
Mm-hmm.
And this is happening just as they announce what people are calling a game-changing new CEO.
Exactly. So you've got this fundamental hope really clashing with technical pain on the charts. It's like quite the conflict.
So our mission today is pretty clear.
Oh.
Unpack this contradiction. We want you to understand what's really driving VZ at this moment.
And you have to look at the bigger picture too, the market context. Futures are kind of flat.
Yes, sideways.
It's that classic tug of war. You've got worries about a potential U.S. government shutdown domestically.
Right.
Butting heads with global stimulus, central banks keeping the money flowing.
And VZ would normally be like a safe harbor in that kind of uncertainty.
That's what makes this recent technical drop so, jarring. It's not acting like its usual self.
Okay, but let's talk about the big news, the potential turnaround story. The new CEO.
Dan Schulman.
Yes, Dan Schulman, formerly CEO of PayPal.
Yeah.
I mean, bringing a fintech heavyweight to a telecom giant. That's not just a small tweak, is it?
No, not at all. It screams strategic pivot. This signals a real shift.
How so? What's the thinking?
Well, look, Schulman isn't just there to, manage the existing infrastructure, the towers and lines. The bet is he'll shift VZ towards actually monetizing that platform.
Monetizing? Like how?
Think more like a digital finance or application layer built on the network, not just providing the network itself, moving beyond just being the phone company.
Okay, interesting. But here's where it gets confusing, the valuation part. Our research, based on cash flow, suggests fair value is around $50 a share.
Yeah. $50.
But the stock closed yesterday near $41.50. That's a pretty big discount.
It is a significant undervaluation based on those fundamentals.
So if the value is there, why are the professional analysts, the ones paid to see this stuff, mostly just sitting on the fence?
Well, that's the classic Wall Street show me story, right? They're cautious. About 54% are stuck on hold and have been for 3 months.
Waiting for Schulman to actually deliver results, not just promises.
Precisely. They want to see the strategy translate into numbers. But, if you look elsewhere,
Sure.
The options market, crowd sentiment there is really bullish. The put-to-call ratio is super low, 0.49.
0.49. Wow. Okay. So that means traders are buying almost 2 calls? That's bullish bets. For everyone put, the bearish bets.
Exactly. The speculative crowd is definitely betting on this turnaround happening, and soon.
But here's the painful part. Those optimistic call buyers. Looking at the chart, they must be completely underwater right now.
That's the brutal connection, yes. The technical picture is, you called it carnage earlier. It's not just a dip.
Yeah.
It's a technical rout. The price sliced right through key support. It even lost the 200-day moving average, first time in 18 months. That's a serious breakdown.
And look at the volume. This happened on huge trading activity.
Massive volume, yeah. That confirms it. This isn't just slow selling. It looks like institutions actively heading for the exits. Big money selling.
And momentum is accelerating downwards too. It's picking up speed.
Right. So forget the resume for a second. The sellers are firmly in control right now based on that chart action. It's that classic dilemma, bet on the story or bet on the tape.
So wrapping this all up, what's the verdict for you, the listener?
Well, synthesizing all this, we have to lean neutral, but with a bearish bias.
Okay, explain that.
The long-term story, the Schulman narrative, the potential undervaluation, that's compelling. It really is. But you just cannot ignore the short-term technical damage. It's severe.
The chart has to be respected.
It has to be. So here are the key levels you need to watch.
All right, let's hear them.
If the price breaks below $41.35, that confirms the downtrend is still very much in play. More pain likely.
Okay, $41.35 is the key support to watch. And on the upside, for bulls.
For bulls to get any real hope to sort of invalidate this immediate bearish pressure, they absolutely need to push price back above the $43.25 to $43.50 zone.
$43.25 to $43.50. Got it. Until that happens.
Until then, the chart tells a pretty bearish short-term story.
So the big question remains.
Yeah, will the power of this new CEO narrative be strong enough to actually heal the damage we're seeing on that chart? That's what we'll be watching.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.